Now, when we step back again, when I think about the banks, financial services institutions, there has been a focus on Black consumers, certainly in the aftermath of George Floyd. Is there anything that, any of the levers that are not being, pulled appropriately, or what advice do you have in terms of what actually moves the needle? Because I think the desire is there, a certain acknowledgement of this population being one that is high growth, and maybe challenge me on that if that's actually not the case, Shelley. But given the attention, what are they doing wrong?
Yeah, I think the desire is there, and I think we're still early stages, and it will require innovation outside of the existing business models. So I think there are a few things that have been happening that are interesting. So certainly on the fintech side, where you've seen digital first players fill that void and deliver, right? They don't have the constraints around physical footprint that some other institutions suffer from in their go-to-market. So they're a little bit more nimble. Their cost structure looks a little bit different. They can tailor their customer experience to actually work better for a demographic that's been underserved. And big incumbents are also trying to do this. So I think that the whole notion of using fintech as a platform for distribution to get to this kind of last mile point where customers are, I think is one that is still in the early days, but has a lot of promise, assuming the investment's there. I think the second point I would make is there's a big issue with credit and developing credit. And it's so critical. I mean, many of us take for granted that we have credit and a credit history. And we don't even realize how often it comes up in our financial transactions and daily lives, and how important it is to wealth building, and how much of a barrier it is if you're credit invisible or frankly just poor credit. And right. One of the things that has been toyed around with in the past, but I think is picking up steam, is this idea of alternative credit scoring. What are the other metrics and things that occur naturally in people's daily lives, whether it be a utility bill or rent payment, that we can use to better gauge people's underlying likelihood to pay back things that they borrow? And so I think that's a second point. The third is you're seeing investment management firms. Again, a lot of them are digital first, but tailor and tier their fee structures to better fit the starting point of wealth of the Black community, and that will, I think, bring more people into the marketplace. And so generally, just continuing to innovate. You saw a large bank recently announce that they're doing no money down mortgages in certain zip codes, and also.
Is that a good thing?
So I believe that. Look, we'll have to kind of see, and I haven't dug through the term sheets on the given deals, but I think in practice, the idea that you don't need a down payment and we're not going to offset that with really, really high interest rates that make it not affordable right. is a good thing. I do think it needs to be paired with other programs and measures to make sure people can stay in those homes. But yes, I think trying to be innovative and then also putting guardrails on it so you're not exploiting, which I think is what everyone is trying to thoughtfully do, is a good thing. We just can't just assume it's going to work. We have to look at what are the wraparound things that need to coincide with that. So I believe there are some good innovative things going on, and it will take some time to see what works and how well and what is scalable. But I do have some level of optimism, and you see some of the same stuff on the small business side and supporting diverse-owned businesses as well. So